There's a moment every trader remembers. That instant when chaos suddenly makes sense. When patterns emerge from the noise, and the market stops being a mystery. Jesse Livermore called it the rhythm of speculation. When I first read Livermore's writings, I wasn't looking for inspiration. I was looking for answers. Why does the market feel random, yet move with such eerie precision? Why do traders win big one day and lose everything the next? And then I realized the market is only unpredictable to those who chase its surface. To Livermore, predictability wasn't about guessing prices. It was about understanding behavior. Livermore once said, "There is nothing new in Wall Street. Whatever happens today has happened before and will happen again." That single line carries the secret. Predictability in trading doesn't come from charts or news. It comes from human nature repeating itself. Think about that for a moment. The same greed, fear, and euphoria that drove markets a century ago are alive today, pulsing through screens, algorithms, and Twitter feeds. Markets evolve. Humans don't. And that's what makes trading predictable. When I imagine Livermore walking into today's markets, I don't see an old man lost in the digital noise. I see him smiling because he'd recognize every emotion, every panic, every rally. He'd see the same mistakes he profited from in 1907 and 1929 happening all over again, just in pixels instead of ticker tape. In this story, I want to take you through that rule, the rule that made Jesse Livermore one of the few men who could consistently predict market behavior when everyone else was guessing. A rule not about numbers, but about timing, patience, and psychology. It's the law that separates gamblers from speculators, and it's the rule that still decides who survives the market today. So let me ask you, if the market really repeats human emotion endlessly, then what stops us from profiting from it over and over again? What blinds us from seeing the rhythm? Maybe it's not the market we need to understand. Maybe it's ourselves. Because Livermore's greatest insight wasn't about price action, it was about self-action. He learned that the market is never wrong, only the trader is. As we step into this journey, I want you to visualize the old ticker room, the faint click of machines, the scent of ink and tobacco, traders staring at price tapes, rolling endlessly. That was Livermore's battlefield. Today, it's your monitor, your mobile app, your crypto chart at AM. Different tools, same psychology, same traps. And somewhere inside this repetition lies Livermore's golden rule, the principle that makes trading predictable. But before we reveal it, we must first confront something darker, the paradox that every trader faces. How can something so chaotic follow such consistent emotional laws? Because once we understand that paradox, the rule will start to reveal itself. Here's the paradox. Every trader dreams of predictability, yet the very act of seeking it often destroys it. When I first started trading, I thought predictability meant control, that if I studied enough, charted enough, I could tame the market. But the more I tried to control it, the more uncontrollable it became. That's the first paradox of trading. Predictability doesn't come from mastery over the market. It comes from mastery over oneself. Jesse Livermore understood this conflict long before psychology became fashionable. He didn't talk about dopamine or cognitive bias, but he lived them in every win, every loss, every sleepless night when his positions turned red. Livermore knew something most traders still refuse to accept. The market isn't a machine. It's a mirror. It reflects who we are: our fear, greed, patience, and discipline in real time. Think about that for a second. You open a chart, and price starts moving. Your pulse changes, your breathing shifts, your judgment bends with every tick. You don't trade the market, you trade your own emotions projected onto it. That's why the traders can look at the same chart and see two opposite trades. One sees opportunity, the other sees danger. The market didn't change, their perception did. That's the paradox Livermore lived and studied. Predictability hides inside emotion. He often said, "The market never changes because human nature never changes." That's not philosophy, that's pure mathematics of emotion. If fear always follows euphoria, and panic always follows greed, then the market moves in emotional cycles, and that's the key to predictability. But the inner conflict is brutal. Every trader believes they're rational until they're not. We make rules, we swear discipline, but when that candle spikes or that sudden dip threatens our position, instinct overrides logic. Livermore described this moment perfectly. The human side of every person is the greatest enemy of the average investor. And that's why predictability feels impossible, because the variables aren't in the market, they're in you. I remember one night during my early trading years. It was earnings season. The chart looked bullish. All signals pointed up, but something in me hesitated. Fear whispered, what if this time it's different? And so I sold early only to watch the stock soar right after. It wasn't the market that fooled me. It was my own doubt. That's when I realized the paradox Livermore faced every day. You can't predict the market until you predict your reaction to it. You can't trade the trend if you can't control your impulse to fight it. Livermore didn't just study prices, he studied himself. To him, the market was an endless psychological experiment. Every tick tested his emotions. Every rally seduced his greed. Every crash tested his fear. And yet, through that chaos, he found rhythm. How? By observing what most traders ignore, that emotions don't just drive markets. They cycle in predictable waves. Fear, leaf. Greed. Euphoria. Collapse. Regret. Repeat. The same cycle that ran through the ticker tape in 1907 is running through your screen right now. When you begin to see this, when you feel the rhythm of mass psychology, the chaos starts to organize itself. You stop reacting and start observing. You stop chasing trades and start anticipating behavior. That's when you start seeing what Livermore saw, not numbers, but patterns of human emotion. But before we can master that pattern, we need to face the most dangerous force in all of trading, the trap that destroys predictability from within, the psychological trap. The most dangerous moment in a trader's life isn't when they lose everything, it's when they think they finally understand the market. There's a subtle shift that happens after a few wins. You start to believe you've cracked the code. You wake up feeling invincible, charts look clearer, decisions feel faster, and every trade feels like confirmation that you're right. That's the trap. Because the moment you believe you understand the market changes its language. Jesse Livermore knew this feeling all too well. He'd make a fortune, only to lose it again, not because the market fooled him, but because he fooled himself. He once wrote, after a man makes money in the market, he feels that he knows something, that he is smarter than the crowd. That is the beginning of the end. Confidence is seductive. It whispers that you've earned immunity from randomness. And when that belief takes hold, every loss feels like a personal insult. Not a signal, but a betrayal. That's when traders start revenge trading, doubling down, abandoning their rules. They stop observing and start fighting. And that, Livermore said, is when the market destroys them, not with volatility, but with ego. Let me tell you a truth that every trader eventually learns. The market doesn't punish ignorance. It punishes certainty, because certainty blinds you to change. It turns curiosity into arrogance, and patience into impulse. It makes you forget that every trade is a probability, not a promise. Livermore's psychological trap wasn't unique, it's the same one that swallows traders today. He'd win millions during bull runs, then lose them during reversals, simply because he stayed too long. He believed his system was bulletproof. He was right. Until the market evolved, until sentiment shifted, until his own pride refused to admit the rhythm had changed. And every modern trader, whether in stocks, crypto, or forex, faces that same emotional seduction, the illusion of control. We chase certainty like addicts. We tweak strategies, buy courses, and follow signals, trying to escape randomness. But what if predictability doesn't mean removing chaos, but understanding your response to it? Livermore realized this late in his career. He learned that the real trap wasn't volatility, it was emotion disguised as logic. How many times have you justified a bad trade with perfect reasoning? How many times have you said, it'll bounce, just one more try, or it can't go lower? That's not logic. That's hope weaponized by ego. Livermore fell into that trap too. He called it the dangerous comfort of being right once. One victory creates a memory your brain refuses to let go of. It tells you the market will reward you again the same way. But markets don't reward memory, they reward discipline. That's the psychological trap. The belief that success confirms understanding, when in fact, it often confirms luck. And when the illusion of control meets the reality of randomness, predictability vanishes. Livermore's brilliance was not in avoiding this trap, but in recognizing it. He accepted that no matter how skilled he became, his biggest enemy would always live in the mirror. So the question becomes, if the market's unpredictability starts in our own psychology, how do we make trading predictable again? How did Livermore turn this chaos into clarity? To find that answer, we must look through his eyes, through the lens of a man who built and lost entire fortunes, yet discovered one eternal truth. Because in his greatest losses, he found his greatest rule. Have you ever felt overconfident after a win, only to watch the market humble you the next day? Be honest and drop your story below. We've all been burned by that feeling. To Jesse Livermore, the market wasn't a battlefield, it was a mirror reflecting the soul of every participant, magnifying their emotions until truth revealed itself. When Livermore looked at a chart, he didn't see numbers. He saw human emotion, fear, greed, hesitation, arrogance flowing in and out like the tides. To him, price wasn't a statistic, it was psychology in motion. And his job wasn't to predict the next tick, it was to understand the crowd before the crowd understood itself. He once said, "The big money is not in the buying or selling, but in the waiting." That wasn't about patience alone. It was about alignment, waiting for the rhythm of emotion to turn predictable. Because when panic peaks, when greed overextends, when euphoria blinds logic, that's when the rhythm becomes clear. Livermore saw what few dared to see, that predictability in markets is born at the extremes of human emotion. When the crowd loses control, the professional gains clarity. He watched crowds chase rallies, convinced that this time is different. He saw traders buy tops because they couldn't stand missing out the same way traders today buy after an influencer's tweet or a viral crypto surge. Different era, same psychology. And Livermore's brilliance lay in stepping back, observing, and letting emotion expose itself before acting. He believed that markets don't move randomly. They move in emotional waves that follow a predictable structure. 1. Accumulation, when smart money quietly buys as the public doubts. 2. Participation, when the trend becomes obvious and everyone joins in. 3. Distribution, when the smart money sells to the latecomers still blinded by greed. 4. Panic, when the crowd realizes too late that the game has changed. Livermore didn't invent this pattern, he simply saw it. Because he watched emotion at prices, he knew that when hope and fear reach their peaks, reversals are inevitable. And that's where predictability hides. He lived this philosophy during the 1907 panic, when everyone else was panicking. Livermore was calm. He recognized that emotion had peaked, that the rhythm was about to turn. He shorted the market when others were praying for survival, and when the dust settled, he walked away with millions. But don't mistake that for luck. That was the product of deep observation, of detaching emotion long enough to see emotion. He wasn't guessing direction. He was reading human nature. He was watching the same play repeat, act by act, decade after decade. Livermore once said, "Human nature doesn't change. It's why the patterns of the past will be the patterns of the future." And that's the essence of his perspective. If you can detach yourself from the crowd, you can predict what the crowd will do next. It's not clairvoyance, it's understanding behavior. When the crowd feels safe, danger is near. When the crowd feels fear, opportunity is near. Predictability, to Livermore, was not about knowing the future, it was about recognizing the cycle of emotion as it returns again and again. He treated the market like a living organism, one that inhaled greed and exhaled panic. And his rule for predictability was this: wait for emotion to reveal its peak, then act opposite the crowd. But understanding this rule wasn't enough. To live it, to trade it, required something even harder: the discipline to do nothing until the cycle revealed itself. Livermore called it sitting tight. And that ability to wait when everyone else is acting was his true superpower. Because in the stillness of waiting, the noise fades, and predictability emerges. But the lesson wasn't free. Every time he ignored it, every time he broke his own rule, the market reminded him brutally who was in charge. And those reminders were costly. They came in the form of lost fortunes, sleepless nights, and lessons carved into his very psychology. The man who could predict the rhythm of markets could never escape the rhythm of human emotion. And that's what makes his story timeless and tragic. Do you think you could sit tight while everyone else panics or celebrates? Be honest, could you really wait? Comment your answer below.